I'm Jean Gray, publisher of American Entrepreneurship Today and host of the podcast series Experience Voices, where I talk with highly accomplished people who share the critical elements that led to their success. I'm pleased to welcome Eric Daugherty of Monterey Financial Services, our guest on the how-to segment of our podcast series Experience Voices. Eric takes our business listeners through the fundamentals of using consumer financing to grow their company's revenues. Welcome to Experience Voices, Eric. I'm looking forward to learning about consumer financing and how small businesses can use it to grow. Let's start with the real basics of what is consumer financing.
Thanks, Jean, for having me. Looking forward to the opportunity to be on the podcast today. Consumer financing, essentially, it's a way for customers to break down the cost of a product or a service into, let's say, manageable monthly payments instead of having to come up out of pocket for the full amount up front. For businesses, basically, it's a tool that they can use to make their products or services a little more accessible to their average consumer, especially for higher ticket purchases, something to the effect of a few $1,000s potentially, or tens of thousands of dollars. For consumers themselves, it makes it more affordable without needing to use all of their credit card balance or any of their savings that they may have accumulated over time.
There's an interest rate that's involved in this. So at what time or point is an interest rate revealed to the customer?
Yeah, so the rates can vary. It kind of depends on what we establish as the appropriate interest rate to charge with the business. Monterey operates under all of the legal capacities, so there's usury rates that are associated, not to get necessarily too deep into that rabbit hole. However, conversations with the business, we identify what interest rate they're comfortable with charging to their customer base, whether that be the maximum per state potentially, or if they want to offer interest-free options, whatever they kind of determine to be the best option for their customers is kind of what we would set up for them. So that could range anywhere from interest-free, as I mentioned, 0%, to usury rates go upwards of 36% interest rates.
So it is the business that is gaining the interest payment on the purchase?
Potentially. So it would kind of depend on the structure of the program that Monterey would set up with that business. So we offer both consumer financing, where we're purchasing the receivable, or we offer loan servicing, where we're managing the receivable. If we purchase it, Monterey is assuming the risk of default for those customers. And if we're servicing it, then the business is retaining that ownership. They keep the receivables on their books. If we purchase it, we're going to get the interest income from that. However, if we're servicing it, we would remit principal plus interest back to the business, minus any payment processing fees or our monthly servicing fee.
So I know there's a lot of different industries using consumer financing. Typically, when a customer is in front of someone offering consumer financing through their business, how quickly does the customer learn that they have been approved? They still need a credit background, right? So how quickly or how easy is that approval process to gain the consumer financing and let the transaction go through?
Yeah, so for Monterey, it's fast. So usually instant or within seconds, essentially. So we have an instant decisioning system that we utilize. That's the portal that our business partners use in order to submit the applications for their customers. We've built it out to be very user-friendly. The business handles the application process for their customers. And as I mentioned, they get essentially an instant decision. And once approved, they can move forward with the sale.
What do you feel is an industry that relies heavily on consumer financing that would make the listener really understand the value to growing their small business?
I think that people would be surprised that essentially any business to consumer industry is offering consumer finance in one way or another. Typically how it works is they start by offering payment plans. If a customer can't pay in full, they offer an in-house payment plan, whether that ranges from 2 payments to 4 payments to 6 payments to 12 and beyond that. They'd be very surprised to find out how often it is being utilized by businesses in order to maximize their sales. Industries such as, healthcare, education, vocational schools, vacation ownership, timeshares, services like tax resolution, retail stores, obviously, e-commerce online, and anywhere you go. There was big news recently about Walmart changing who their buy now, pay later partner would be between Affirm and Klarna. So those are different consumer financing options that folks have, just depending on what the business wants to offer to their customer.
Well, it's just, for example, I think my experience is with going to the dentist and finding out that I have $2,000 for a crown or some procedure. And then the very first thing they say to me is, well, you can finance it. Is that a typical consumer finance situation?
Most certainly. So anytime that a customer or consumer has a need or a want where they're trying to purchase a product or a service from a business and they can't come up with the money or prefer not to come up with the money, that's kind of what we're seeing a lot of the customers are doing today, is they don't want to pay out of pocket for $1,800, a few $1,000s to make that purchase. But yeah, that would be a perfect example of an option. Basically, that dentist's office has financing partners where they would run an application through their system, identify if that customer qualifies for that particular financing company's underwriting. And if so, then they can have the option of moving forward with financing.
In a lot of instances, if that financing wasn't available, the client or the patient then delays or does not go through with the purchase, and they would normally walk out the door. So that's one example of where a small business is growing their sales by not allowing potential customers to leave. Can you share a little bit about the other advantages that a consumer financing partnership has for helping a small business grow?
To your point, the biggest one is obviously going to be increased sales, where they're not allowing their customers to leave out the door once they've already brought them in. That's the hardest part, is getting them in the door. And then the next hardest part is executing on the sale. So obviously having the opportunity to increase their revenue is number one. When we give those customers a way to say yes, as opposed to having to find a way to say no when they don't want to pay out of pocket or use that credit card. On top of that, it certainly helps with cash flow. Bringing dollars in the door is certainly important for a business to stay afloat. Customer acquisition. Once you have a customer, they say that a repeat customer is a high percentage likelihood. You also get referral business and everything of that nature. And then customer satisfaction. When a customer comes in, they know that they need or they want a product or service, and they have the option to get it without having to, what they may feel is going bankrupt in a way. It's only going to make them happier that they can access that product or service. There's also the reduced burden for businesses to having to manage their own payment streams, particularly when customers are past due or delinquent on their payment plans.
And I guess there's a competitive aspect to this, that in some industries, if most dental offices have consumer financing types of options, that it drives almost all of them to have it because they know the consumer will shop around.
Certainly. So one of the big things that I post a lot on my LinkedIn when I'm sharing information about the industry and what we do is I talk about how not offering customer financing anymore is a disadvantage. Everyone's doing it. It's not because it's the cool thing to do. It's the thing that is a necessity. The average customer today doesn't have $1,000 in the bank account. They need to pay bills on a monthly basis, on a weekly basis. If they have an opportunity to afford something that they want or need by having an affordable monthly payment of a couple $100 or $50, whatever it may be, depending on the ticket price, then it's going to provide an advantage for that business because they can be more competitive with their industry, within their industry.
What are the purchase amounts that a consumer finance company such as yours processes or puts through?
Yeah, so for Monterey, typically what we like to deal within is more what we would refer to as higher ticket purchases. I would say kind of a sweet spot, if you will, is probably a few $1,000s. As I mentioned earlier, not everyone has $1,000 in their bank account or even a credit card that has that accessible balance on it. So they need an alternative option in order to afford what they're looking for.
Is there specialization in the consumer finance industry? So if a small business owner in one type of store or online business might go to one place and find out we don't handle that, but there's a consumer finance company somewhere down the road that probably does. Is there specialization?
Within the consumer financing industry, there definitely is specialization. Certain businesses are more comfortable in certain industries. I'll speak for Monterey, where we're pretty comfortable with pretty much any consumer product or service. We're willing to look at it and see if our offerings make sense for that business and its owner. We like to say we specialize in everything, even though it's not a particular industry necessarily. I mentioned a few earlier: education, healthcare, vacation, timeshare ownership, tax resolution type services, vocational schools, retail stores, e-commerce. We can kind of take a peek at anything that there's a need.
So when I'm acting as a small business owner and considering consumer financing, what is the obvious checklist that I should have, like maybe 3 bullet points in a row of that my business would be at least qualified for consumer financing?
We refer to it kind of as proof of concept. The product or service that's being sold has to have some level of perceived value for the customer base for us to find that to be a fit for Monterey. There has to be sales of some sort. We're not necessarily asking for a business to be a multi-million-dollar company from the start. However, there has to be some track record of there being sales and need for that product or service. We also want to make sure that the business has what I'd refer to as all their I's dotted and their T's crossed when it comes to the structure of their business. Do they have some sort of agreement or invoice or terms and conditions that their customer is signing? Do they have procedures in place to handle things like buyer's remorse potentially? As much as we want to say it doesn't happen, it could happen. So it's good to have procedures in place for those types of things, having your financials in order, keeping track of everything, using the tools that are accessible to you online or through your own bookkeeper or whoever that might be, as well as having your Secretary of State documents, articles of incorporation, all of those types of items, having your house in order essentially.
Well, it's a fair amount of documentation. So a startup, maybe a company that's been in business 1, 2, or 3 years, are they typically eligible? They might only have 2 years. Is there a minimum number of financials that you need to go down the road for setting up a relationship?
Yeah, not necessarily a minimum. Like I said, just proof of concept, even if it's 6 months, a year, kind of just depending on the industry that they're in. We just want to make sure that there's some sort of track record of success and they have everything in order to be successful long term, because we look at our relationships as partnerships and we want to help them be successful, but that kind of starts with them, and having all of those documents in place is only going to help them long term.
The company has all of that documentation in place. How quick can they gain approval from your company?
So Monterey goes through a due diligence process. And through that, we're going to review those documents that I had mentioned. We're going to talk to the business and identify fit, understand what sort of offerings they want to provide to their customer base. And from there, once we have an outline of a program that is going to work for them, we would submit it for approval with our team. Ideally, assuming that there's no hiccups or red flags or anything that kind of comes up out of the blue, we try to get the turnaround time in about 2 to 3 weeks. There is a training process as well. We do provide training for that instant decisioning system. We call it Oasis, or otherwise a portal. We provide all the training on that for the business owner, any of their sales representatives, anyone that's going to be involved with that process for financing. And once that's all done, they're up and running, ready to go and start submitting for applications.
So, depending upon the industry or for all clients, are they given a device for the consumer application to be accepted, or do they point the customer to a website? How do they get the customer from, yes, I'm interested in financing, to actually taking a few minutes to apply?
That would come down to the type of business and how they operate. We work with businesses from e-commerce to in-person, in-home to over-the-phone sales. So depending on how they operate, essentially what it all boils down to is we're providing that portal, Oasis, to the business. And typically how our partners work is they will enter in the application information on behalf of their customer. So whether they have them on the phone or they're standing right in front of them at the desk and they're trying to finalize the sale, they can enter in the application details and then submit it and get their approval.
The customer could literally be in a store or on the phone and find out within moments that their purchase will be approved for the financing?
Certainly. Our application process itself does take a couple minutes in order to get all of the details needed. It's similar to filling out a credit card application online, as I refer to it as. We're going to ask you for your basic information, your name, social security number, date of birth, address, employer information. Once we have that information, or once the business has that information, they can enter it in to the application, hit submit, and at that point we would give that instant decision.
What other services are tangential to consumer financing that kick in as the small business is growing and wants to outsource or gain some outside assistance?
Depending on what is set up initially, if we only have consumer financing as the solution in place, Monterey does also offer some ancillary products such as that loan servicing. So if they want to keep those receivables on their own books, they want to assume the risk for default on those, they want to get the benefit of the interest income from those depending on those default rates, they can do so. We also do offer debt collection, whether we have managed the account from the start to finish and someone goes delinquent on their payment plan, we can place that into our collections agency and give it another shot. Or we can also offer third-party collections, where if that business has managed their payment streams in-house and have gotten to a point where it doesn't make sense for them anymore, or if they've used a different servicing company to manage those payments prior, we'd be happy to look at those and offer our collection agency as an option. Our collection agency doesn't cost anything to set up or place accounts. We don't purchase bad debt. However, we do manage it. We work off of a contingency basis. So we don't earn money unless the business earns money.
That's a basket of services that a small business would value to grow. Is it fair that once you have set up a relationship with a small business, that it goes on for years?
Ideally, that's what we all want. Like I mentioned earlier, it's all based off of partnership and relationship. At the end of the day, for it to make sense for Monterey, the receivables have to perform. And we're going to do everything in our power, whether that be underwriting, pricing, whatever it may be, to establish a program and retain a program that is going to perform and be there for the long haul. We're going to work with our partners. We're going to work with these businesses in order to set them up for success from the beginning, but also we're going to always monitor performance, always monitor what sort of receivables we're seeing, the creditworthiness of these customers, and kind of identify if there might be any pain points. If there are, we'll work through it with them and let them know kind of what we're seeing and what changes potentially would need to take place for it to work for the continued future.
Well, it's great speaking with you today, Eric, and explaining consumer financing. I think there are a lot of small businesses that need support as they try to grow their sales, having better cash flow, being able to offer greater customer service, I think is really important for their success. So thank you again for being a guest on Experienced Voices.
Thanks for having me, Gene. Appreciate the opportunity to speak to you.
You have been listening to the podcast series Experienced Voices. To hear more and subscribe, visit AmericanEntrepreneurship.com/podcast, where you will also find a form for listener feedback.